Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, let's focus on the new kid on the block, wastewater treatment solutions company, Enviro Infra. Well, that's just listed on the bourses at nearly a 40% premium in comparison to its issue price. We're currently joined by the chairman, Mr. Sanjay Jain, as well as the MD, Mr. Manish Jain, of the company, who joins us. Happy visuals coming in from there. Good morning, Manish, as well as Sanjay. Congratulations. Solid listing. And now, in fact, the responsibility goes up because all those shareholders will want to know what should we do from here on post this bumper listing. Let's get a couple of numbers going. Could you tell us what is the growth trajectory we should be looking at from here on, and what kind of profitability or margins we should work with?
Good morning, and thanks a lot for having us on the show. I'm thankful to all the investors who have invested in our company and for such an overwhelming response, which confirms the confidence in the growth journey of the company. We are having a very good order book of 1,906 crore as on 30th of June. Our growth pattern for the past 3 years have been 80% CAGR on top line, 130% CAGR on EBITDA, 132% CAGR on PAT. Our EBITDA margins are to the tune of 24%, and PAT margins are somewhere around 15%. The order book is diverse. We are having the orders in 8 states presently. We are increasing our footprints in other states, and we are increasing the number of projects wherein we are already working. So with the order book which is available in hand, the diverse order book, the waste to energy initiatives and innovations, we expect that we will continue to maintain similar margins what we have been doing right now.
And what about the top line growth, sir? Will you all continue at the same pace? I think the last 3 years, you mentioned that top line growth has been very, very good. What is the rough range we should work with in the time to come?
The top line of the company, if you see in the last 3 years, it was around 30%, 80% on CAGR basis. Going forward, we expect a decent figure of around 30 to 35% on the top line we will maintain. And in terms of margins, EBITDA margins, it will be in the range of 24 to 25%.
All right, 24 to 25% EBITDA margins with 30-35% top line growth. You have an order book of nearly 1,900 crores, and that is what brings me to my next question. And maybe Manish,
I would like to add one more thing.
Yes, please.
In this, what Manish has told, the order book is 1906 on 30th June. In July, we got one more project from NMCG. It is 267 crore project. So total order books gives us the visibility of around for the next 2 years. And further, this year, current year, it was being the election year. And very less projects were floated by the government department. Going forward in the third quarter and fourth quarter, we are expecting a lot of schemes which the government has initiated. Number of projects will come up, and we are quite confident based on our success ratio which we have achieved in the last 3 years. We will bag good orders. That's all.
Right. So that is exactly what my next question was, because your order book that you gave was 1,900 crores, that after you won an order worth around 260 crores, in the next couple of quarters, what is the quantum of orders that you would be bidding for? And what has your traditional market share run rate been? So in that case, we'll understand, what are the orders that are likely to come in the pipeline over the next 2 quarters? And if you can give us an inkling into what FY26 looks like in terms of an annual order inflow as well.
There are various government initiatives under which the projects are coming up. These are basically 2 different segments. One is water, and the other one is wastewater. The water segment for rural, it is Jal Jeevan Mission, and for water and wastewater it is Amrut for cities. So after these elections are over, after H1, a lot of projects are coming up. The budgetary outlay for JGM for current financial year has been to the tune of 76,000 crore, and for Amrut mission, this budgetary outlay from center has been 8,000 crore along with the state and ULB contribution, which is separate from this 8,000 crore. Further, NMCG is having its own budget outlay. So a number of projects are coming up in each state, and the success ratio of the company, which for last financial year has been 58% and 37% on an average basis for the past 3 years. So company is expecting a very healthy order book going forward as well. And the growth trajectory, what Sanjay has just confirmed, we are quite hopeful that we will be meeting those growth trajectory.
All right. And finally, before we let you go, there are two major segments. There's wastewater treatment and then there is waste to energy. If you could give us how this split of these two in terms of revenue will pan out over the next few years, and what is the margin differential between these two?
Basically, waste to energy initiative is what we are incorporating in our projects, in our wastewater treatment projects itself. That waste to energy initiative as well as sustainability. Being power intensive projects, a lot of power is required for the regular operation and maintenance of these plants, and these plants are 24/7 operations. So just to reduce on that recurring cost and the power to be drawn from the grid, we are providing solar power plants as a part of the project, so that the ultimate requirement and the power to be drawn from the grid that reduces, so it ultimately reduces the recurring cost and recurring cost of the end client as well. This is one initiative. Second, it is waste conversion of waste to useful resources. So we are taking this initiative forward by generating biogas from the sewage treatment plant that we are installing. This biogas can be purified and converted to CBG, or this biogas can be used for power generation. So basically these are waste to energy initiatives. These are reducing the carbon emissions, and these are making the project viable for carbon credits as well. So these are the initiatives we are building up as a part of our project itself.
All right. So it's not basically a separate revenue item, but an ancillary revenue over and above what you are doing in your business itself. Wish you good luck. We've got the key headline numbers for now for the next couple of quarters to work with, but looking forward to speaking with you post your quarterly earnings that you report to exchanges as well. Thanks a lot and congratulations once again. With that, we're into a short break. Come back on the other side. We get you more on the markets and a lot of stock specific action.